I bid you good morning, good evening, good night, wherever you may be watching this transmission. It is I, Mike Martins. Big hug. Big hug to everyone out there watching the transmission. And guys, gold is rallying. Gold is doing what it's got to do. Our price is going to start coming to reality where things are going to get super expensive because we've severely devalued our own currencies by printing and creating more money and stimuluses across America, Canada, and Australia and New Zealand, basically with these rate cuts. Canada held, but Australia went through 3 rate cuts, and I think an ounce of gold in Australia now is like $2,300 or $2,600. I gotta check the numbers, but yeah. So here it is, guys. Let's take a look at where the markets are. Today is January 6, 2020. We're midday in the markets right now. Well, the markets are gonna be closing in about 3 hours. So S&P 500 is sitting at 3,237, up 2.69. The Dow is still having a struggling time to keep its head above water at 28,616, negative 1841. And Russell 2000's down a bit, so you're going to see a lot of portfolios or hedge funds take a slight hit today. You got crude oil up 13 cents at 63.18 a barrel of crude, and gold, and that's what I wanted to get to here is gold, 1,567, up 14.60. Yesterday it rallied like crazy. Silver sitting steady at 18.15, no change at all. And European US dollar, the 10-year bond is slightly up at 1.79, and VIX is kind of holding steady above water at 14.35. Up 0.33. So we're seeing the Nikkei down, huge. The FTSE over in the UK down 47, not that much, but the Nikkei is down huge. And everyone's looking forward to the next open market in Asia, aka tonight. Last night I was watching the Asian/Australian markets. Oh my God, I was just like floored when I saw some of the gains and losses there. So here it is, guys. Gold hits highest since 2013 as Goldman backs bullion in crisis. Oof. So I'm having a really tough time finding anything outside of Kitco for the gold news. It's just Kitco that's covering the gold news. So if you guys, Yahoo's got a little bit there, but they kind of have to backburn it in a way showing, well, it's up, well, it's because, but everything else, like Kitco is getting to the, and who's this, Global Mail has something, but you're not finding too much in here, where I'm at, I'm not finding anything. Bloomberg, gold surged to its highest since 2013 as rising tensions in the Middle East stock demand for havens, and Goldman Sachs Group, Inc., seeing more room to run. Palladium extend gains to a fresh record. So, especially for those that are invested in junior miners and junior gold miners and explorers and stuff, all the exploration companies and stuff, there's a good chance that the bigger companies that don't have any more ceiling will start buying those little companies, right? Bullion neared 1,600 an ounce after Tehran said it would no longer abide by any limits on its enriched uranium following the killing of General Qasem Soleimani. President Donald Trump said he's prepared to strike Iran in a disproportionate manner if it retaliates against any U.S. target. Gold's may prove better bets than oil amid rising tensions, according to Goldman analyst. History shows that under the most outcomes, gold will likely rally well beyond current levels. I think gold is severely undervalued, and so is silver. I think gold should be sitting anywhere between, in my opinion, 1950 to 2,300 an ounce, easy, like a mainstream level. Shouldn't be sitting at 1,600. It's got to be a lot higher than that. It's got to have a little bit of more. There's got to be more delta in here because it's got to start coming to reality. It's not at reality. We haven't kept our markets on autopilot. We have been printing money. We've been constantly putting gold on the back burner, constantly not showing its shine because it has the potential, right? beyond its current analysis, including Jeffrey Curry and Damien said in a note. That's consistent with our previous research, which shows being long gold is better to hedge to such geopolitical risks. Oh, yeah. Spot gold climbed as much as 2.3% to 1,588 an ounce on Monday, the highest level since April 2013, and it traded at 1,573. At 9:39 a.m., New York prices could reach 1,600 if tensions escalate further, according to analysis, including those UBS Group AG. Could this crisis be masking the realistic, maybe the crisis, the timing was perfect on this crisis, basically to avert and see, so we could see a housing crash or a housing correction in the West, and we could see the price of gold have to go where it needs to be, because we have all these gold and silver spoofing markets and all this Mickey Mousing from these big corporate groups doing all this Mickey Mousing. So is it getting to a point where it's like, you know what? It's got to go somewhere now, because we've spoofed so much, we've printed so much, we've got the printing machines on 24/7. This whole repo buyback thing, and what rises to the top? Gold. What surfaces? Gold. When you're going for gold, what do you find? What shines? Gold. Whether it's a flake, a nugget, or you know what I'm saying? Gold prices power to 7-year high. Here's what price spike suggests. So this is from today's date. 2020 is expected to be another year for significant uncertainty and turmoil. But the question is, what asset will emerge the victor when dust settles from global trade war, Brexit, recession threats, negative bond yields? It's a showdown of global proportions. I forgot to mention negative bond yields and quadrillions and quadrillions of dollars of derivatives floating around the markets, leveraged and deleveraged and re-leveraged and repacked and re-leveraged and packed and resecured, packed, re-leveraged and packed. So don't miss all our exclusive coverage. So guys, this is Kitco. Don't forget to check them out. They're really good. Kitco News. Gold prices are again sharply higher and hit a nearly 7-year high at 1,590 basis February. COMEX Gold in early U.S. futures. Trading Monday. Meantime, silver futures scored more than a 3-month high of 1855. Basic March COMEX futures. High geopolitical tensions are driving the safe haven metals north. February gold futures were at least up 25.80 at an ounce in 1,578. March COMEX silver prices were last up at 0.319 at 18.47 an ounce. So we're going to see $20 silver in 2020. 2020 silver. Here it is. It's just like, hey man, what's going on? Yeah, boom. Technically, the gold bulls have a solid overall near-term technical advantage and gained more power today as accelerating price uptrend is in place on the daily chart. Bulls, next to the upside price objective, is to produce a close in February. Futures above solid resistance at $1,600. I said conservatively 3 shows ago that gold is probably going to sit around $1,600 in 2020. It needs to break the 1,500. It's going to be around 16, and we're already pushing that right now. I think I always undervalue I try to be as super conservative as possible, so I'm not trying to, wish something or try to make people's feelings feel better, or you know what I'm trying to say, guys. I'm just trying to be as conservative. I said gold will sit at 1,600, hopefully, but it's still severely undervalued. But they're going to do what they can, just like the housing market in the West. First-time home buyers loans. If you guys haven't been following me for the housing market, I've been following this. First-time home buyers loans, interest-only mortgages, zero down mortgages. Put zero down. If you qualify, sign right here. People that did that in the UK with zero down mortgages 4 years ago, are in an absolute disarray because their homes are worth a lot less than what they signed for. So they built no equity in those homes, so they lost. They signed for a loser loan is what they signed for. First support is seen today's low of 1,562 and then 1,555. The bottom of today, upside, price gap, the daily bar chart. Wyckoff's market rating at 8.5. Much silver futures bulls have the firm overall near-term technical advantage as price uptrend is in place on a daily bar chart. Silver bars, here it is, guys. So we need silver to start picking things up. It's very important. Gold soars as Middle East tensions brew a perfect storm. I've been saying perfect storm for years in the housing crisis. Now it's starting to creep up in gold talk. Gold surged on Monday to a near 7-year high as the U.S. killing of an top. We already this. And palladium surpassed 2,000 an ounce for the first time. Spot gold was up 0.8% at 1,564 per ounce as of 12:21 Eastern, after rising to 1,579 earlier in the session, in its highest since April 2013. U.S. gold futures gained nearly 1% to 1.566 per ounce. The markets are nervous about what comes next between the United States and Iran. Yes, I wholeheartedly believe that the markets are hinged on this. I really do. But could this be a nice masking or a cover to basically give for the true price of gold? Like, you see what I'm trying to say? It's been long enough. It's been spoofed. It's been rigged. It's been set up. It's been suppressed. It's been on the back burner for the longest time. Could they be using this? Could they be using Brexit for the housing crash in the UK? Could they be using the fires in Australia for their housing crash as an excuse? Could they be using, instead of actually going, because technically nowadays we're not supposed to learn from our mistakes. They're going to use excuses for why things are going the way they are, instead of saying, look, gold and silver have been severely undervalued for a long time. Instead of telling us the truth to our faces. No, we haven't kept our economies on autopilot. We've been rigging everything from left, right, center, on top, on the bottom, in, around, in the front, fourth dimensionally. The missing parameter is time. So what are we doing with the time? We're lying. We're making things up. We are repo buybacks, derivative markets. It's not a real. So what soars, or what comes, what shines, what gives its brilliance, what, like the sun? Gold. Now is the time to take some profits in gold. I sold just a little smidges here and there this morning, a little bit of pocket money. Gold traded at $15.90 last night, the highest level since April 2013. The metal was already deep into seasonally bullish time of the year, but fresh geopolitical tensions are mounting. Uncertainty in the Middle East has provided a massive tailwind. Traders should also not overlook Friday's ISM manufacturing read. Here he goes, another one, which contracted more than expected for the 5th month in a row. Although the headlines will focus on Iran, economic calendar this week is jam-packed. ISM non-manufacturing and factory orders are due tomorrow. Non-farm payroll is out Friday. Very looking forward to that, people. Technicals. We have been outright bullish gold since December 23rd. Seasonally kicked in. Price action is trading above the major 3-star resistance that aligns previous highs at 1,566.2 to 1,571.7. Above here, we have major 3-star resistance. We noted back in September at 1588.2 to 1595.7. This could provide a bit of ceiling in the near term technical. So I'm talking about that gap and delta we're trying to start to build up here on gold. So it gives it a little breathing room. So it can continuously keep breaking new records as it sits at its new levels. You know what I'm saying? For this reason, we slightly neutralized our bias and suggest that longs who have ridden wave capitalize in one new way or another. Lastly, a failure to close above 1566.2 could encourage a wave of profit taking. So are people going to be taking their money? Are people going to be taking a bit? I took a bit of profit, nothing super major. I mean, just enough to fund this freaking operation and pay my internet, pay the internet bill and all that other crap. But keeping it going, right, is always a way to keep it going. So another stock I'm in right here is Crescent Point Energy. I bought it at $4, and I don't know, $4 and something. It's at $6.16. Also, $4 Canadian, guys. And a couple of other stocks I'm in here that I'm in actually here. I'm not a stock. I don't take advice from someone like myself that can't read. So just do your own research. Read books, guys. Just read. Pick up knowledge. Pick it up. It's everywhere. Knowledge is everywhere. Just pick it up. It's in a book. S&P TSX Composite down despite strength in energy sector. U.S. market mix. So now this is in Canadian Stock Exchange. The TSX is down, but even though the energy sector is up, why? I'll just sum it up in a nutshell, not to take too much of your time. Because they've been selling energy at a loss. Energy in Canada, especially the oil, has not been profitable for at least 7, 8, maybe 9 years, till we lost the $120 barrel, till we got down to a $40 barrel. They've been producing at a loss. So they produce more, they just basically take more of a loss is what they're doing. That's why. I think markets are going to start surfacing. The oil's going to you're going to start to see surfacing and separations in the market very clearly because how the sectors have been so overly exaggerated, manipulated, and lied. We've been sick and tired of being lied to. Guys, don't forget to subscribe to the channel if you want. I'm not just one of those guys that talk about gold. I invest and take my time and look at different things and look at different angles in the markets and junior miners and all kinds of cool stuff. Maybe we'll do a junior miner show soon. On Mike in the Night, we'll talk junior miners one time. We'll just talk about, nickel and dime stocks and potentials where companies have a very low net worth and have a good gap to grow, because that's what you want to look for. You want to look for ceilings. You don't want to invest in a $2 trillion company that has what you think is going to be worth $4 trillion. I don't think so. So you got to look at companies that have a substantial gap to grow, right? So that company that's worth $30 million might be worth $2 trillion one day. That's what you want to look for. Okay, guys. So don't forget to subscribe to the channel. Don't forget to join here if you guys want to join. I cover everything, my personal life, things happening in business. It's snowing today. I might do a video on that. Just join Mike Martins. We got all kinds of cool emojis if you want to join. And also, guys, what else did I want to show you guys? Yeah, I got all kinds of coverage on the fires in Australia from Mike in the Night is growing fast. And trends in the housing market this Wednesday, where we talk about housing across the Commonwealth and how it's been impacting and the same patterns we've been seeing. And trends in the housing market, guys, is going past 4 years now, comparing the Commonwealth. Look at this, guys. Look at this. Trends in the housing market's been going years and years now, comparing the Commonwealth and the same patterns that we're seeing across the board. Don't forget to shop on my Teespring. I got all kinds of cool stuff, towels, t-shirts, pilot episode of Mike in the Night t-shirt, guys, if you want to grab that. There's my pilot episode of Mike in the Night, and there's the back. It's really awesome, guys, if you want to pick up something. If you're going to buy something anyways, buy something from a local YouTuber. If you're going to buy a t-shirt, buy one locally. Keep local YouTuber employed. Let me know what you guys think in the comments below. Gold, we ain't seen nothing yet, people. You ain't seen nothing yet. Here's something you're never going to forget. Thanks for watching.